Hey all, good morning and welcome to ShareTreck. It's the 4th of August 2022. This is Raj here and welcome to the morning show. Today we are poised at a very critical level when it comes to the indices. It's a make or break time. I've been talking about how QQQ is reaching a diagonal line of resistance on the bear channel. So if we break through that and come out, then we'll get into a bull channel in my opinion. If not, we are going to drop quite a bit and we'll have to work our way up back again, and any bull channel might take a much longer time. So we'll have to see which of these two possibilities is going to happen today. So let's get started with our daily show. First, before we go into the critical point for the indices, let's take stock of what's happening around the world and in our local area, so that we can see what are the influences today, and then we'll go and have a look at the indices and count the odds of breaking back down or breaking out of the resistance. So it seems like the Chinese stocks are likely to get a boost today, as Alibaba reported expectation beating Q1 earnings this morning, and that leads me to believe that things are probably much better than what we think about in China. And also we'll have to watch stocks like NEO and see if they get any breather. Revenues for Alibaba came in at 205.55 billion Chinese yuan. That's around 30.68 billion US dollars. And this is against a comparison of 203.19 billion yuan. So it's a slight beat when it comes to the revenue, beat nevertheless, but it was not any improvement over the same period last year in 2021. So there is no qualitative improvement in the performance, just the expectations have been managed much better. Earnings per ADS is at around 11.73 Chinese yuan versus 10.39. So that's a really good beat as far as the earnings is concerned. Again, this is in terms of expectations, because the earnings are down for the same period by 29% when compared to 2021. So it's not a great performance, but it's not as bad as expected. Net income came in at 22.73 billion yuan versus 18.72 billion. So in the net income department, they have exceeded. So overall, not as bad as expected. This is the same story with many of the stocks this quarter. They did not do as well, but they did not do as bad as expected. So this is an expectation beating performance, and shares jumped at 7% and will be a positive catalyst for today, in my opinion. And with that said, I have another bit of news. This is regarding Restaurant Brands International, RBI. They are the owner of Burger King, Popeyes, and Tim Hortons. Tim Hortons performed better than expected and boosted the overall performance of Restaurant Brands. Earnings per share came in at 82 cents adjusted versus 73 expected. So that's a really solid earnings beat of 9 cents per share. And revenue came in at 1.64 billion versus 1.57 billion that was expected. Again, a pretty good beat out there on the revenue. Tim Hortons is mostly a Canadian presence, so it seems the strength in the performance came to a good extent from Canada for Restaurant Brand International. So that's a positive, I think, of having taken over Tim Hortons, at least for this quarter, it seems that way. In terms of genomics companies, I think we are expecting Intelia to report today at 8 a.m. and we'll talk about it at our live stream this evening at 3:30 p.m. I was under the impression that Bluebird Bio should report today, but I'm not able to find any press release even in their own official website. So I do not know if Bluebird will report today. There is not much communication out there, but Bluebird report is going to be very critical in Q2 because they are very close to expecting an approval from FDA for, I think, Beticel. So we'll have to watch that, and I'll bring that information to you as soon as it is available. We are also poised at a critical point on the indices, as I mentioned in the last so many sessions. QQQ is almost touching the diagonal resistance line on its bear channel. If China and Taiwan end up in a conflict, that is one scenario in which I see the QQQ getting pushed down by the diagonal line of resistance. This morning, there are reports that China has begun drills around the island of Taiwan. So they have surrounded it on all four sides and they are doing drills. Beijing regards Taiwan as Chinese territory and does not like US visits to Taiwan, as it seems to confer sovereignty to Taiwan, and especially any meeting with the premier of Taiwan by foreign dignitaries is considered as recognition of sovereignty of Taiwan. So China had already warned Nancy Pelosi not to visit and not to meet the premier, and she did both of the things that she was asked not to do. So now China is doing the things that it's not supposed to do. Taiwanese officials have said the drills violate United Nations rules, invade Taiwan's territorial space, and are a direct challenge to free air and sea navigation. So these activities will continue despite protest, and most probably China will say that our exercises will end in the next 2 days, and then we'll withdraw. That way, China would have done exactly the same kind of defiance that US did with the Pelosi visit. And this is how international politics operate. And if China doesn't do this, then China will appear weaker in the international arena, and China can't have that. So this was a naturally expected outcome. We just have to hope that this doesn't become the reason for the markets and the economy to tank. Today, you can see that pre-market, it's almost flat to positive, all the indices and indicators. So we'll go to the TradingView desk and have a look at the pre-market action right now and see whether there's any impact taking place, because as I mentioned, this is a very crucial week. So let's go to the TradingView platform. So here we are in our TradingView platform. I'm looking at the Nasdaq futures. They are up marginally 0.29%. This is not significant. This can get wiped out when the market opens. So I would consider this to be a neutral at this point of time. We can see that we had a diagonal line of descent and we fell down along this line. And then we kept on moving up on a bull channel. This is the bull channel on which we were. And now we are approaching the 200-day exponential moving average, which is a very critical test for us. We have to break through above from there. So this is what the situation is for Nasdaq futures. They are not as positive as we would like them to be, to have a green open, but nevertheless, they are slightly positive. I'm going to take it as a wash. Let us go on to look at the indicators. When we look at the indicators out here, we can see that US oil has gone up slightly today. Yesterday, it fell down below the line of support, which we had here at 91.70. So I'm going to mark this red. In my opinion, oil has to continue falling down further, at least until it touches the support of 88.0 before it goes up again. Today, we have a doji candle pre-market, and it's being constrained by the horizontal line of resistance at 91.70. The MACD is bearish, and the momentum is also below average and flat. So it indicates to me that US oil will fall down further today. Next, let us look at QQQ. And this is where I am really concerned, because if you look at QQQ, this is the diagonal line of resistance, and this is the bear channel between the red line and the green line. And we also have the 200-day exponential moving average just above the diagonal line of resistance. So the possibilities today are twofold. One is actually three possibilities to that. One is we break through the diagonal line of resistance, and then we break through the 200-day exponential moving average, which is this thick line of resistance that we find here. And that will be the best case scenario for us. However, there is also the possibility that we break through the diagonal red line of resistance, and then we get pushed back the 200-day exponential moving average and come back down again. That is the second possible. And the third possibility is that we just bounce back from this diagonal line of resistance out here and start our way back towards 306.53. The MACD is absolutely bullish, no problems out there. Momentum is also very strong, and there's a little runway before being overbought. And whenever RSI gets into overbought situation, the security tends to either move sideways or move down in order to cool off before it moves up further. So that that situation is also weirdly coinciding with the test that we have with the line of resistance here. So today is going to be a very critical day, and I think I would probably put some calls today. This is my personal opinion, not financial advice. So that's what I have to say about QQQ. And if it does fall, I think, as I said, we are going to touch 306.53. And the next level of support is at 297.74, which is a minor support. Let us hope for the best. and we'll see what happens in the rest of the day. S&P 500 also is critically poised at a resistance here at 415.60, and if it breaks through that, it has a resistance at 200-day exponential moving average that is sitting at 417.61. Pre-market, we are positive when it comes to S&P 500. We were also marginally positive when it came to QQQ. And in S&P 500, we have a bullish MACD, and we also have enough room for us to become overbought. So there is room for S&P 500 to go and break through this diagonal horizontal line of resistance and check the 200-day exponential moving average. Russell is again doing pretty good. There is plenty of room for it before it encounters the next resistance, which happens to be the 200-day exponential moving average, which is sitting at 194.30. Right now, pre-market, we are up 0.31% marginally. It's at 190.34. So there is a $4 runway still available for us. And in Russell's, you have got a bullish MACD, and momentum is very close to being overbought. So in the morning, you can see a bit of a jump, and then there should be a plateauing and then a dropping of price on the index. So that's what I'm expecting for Russell's. Dow Jones Industrial Average again is looking pretty good. It's got plenty of room to move before it becomes overbought. MACD is bullish, momentum is also positive, and the next resistance for it is the 200-day exponential moving average. So looking great out there. VIX has dropped again today, and we want it to come and touch at least 20, somewhere around 20. It has to fall below 20 in order for it to be good. And there's a possibility that instead of falling below 20, it may bounce off this minor support, which is out here, which we have seen before. So there's a possibility that it could bounce off this green line and move back up. So that's always a possibility. And MACD is turning bullish. It's about to cross the signal line, but momentum is weak. So I don't think VIX is going to go up again. But if something happens in the Taiwan-China area, then that could potentially push us up. Put call ratio ended yesterday firmly bullish. That's a good sign for us. XLY XLP shows that yesterday was a very strong risk on action. That's also looking good. US dollar index is going up again. This is not a good factor for us. We need a US dollar index to be pushed down by the 9-day and the 20-day exponential moving average. But we can see that the movement is consolidating at its range bound, and it's very narrow range. So I'm hopeful that US dollar index will cool off. With that said, let us go and have a look at our tech stocks, which are index moving stocks. And first, I'd like to look at Amazon. Pre-market, it's up 0.59. There are lots of gaps left behind by Amazon, so that's also another reason why Amazon is likely to come down. There could be some weakness out there. At this point of time, we can also see that even though MACD is bullish, we are in an overbought situation. That's also another reason why we may probably come down and bounce off this box and go further ahead, or choose the opportunity to fill up this entire gap that was created out here. So there's a buying opportunity out there if Amazon comes down. And we also have support of the bull channel, which is at the bottom. So it's a very low risk, in my opinion. Risk reward is more skewed towards rewards once it comes down from there. But right now, risk rewards is more skewed towards risk at this point of time, in my opinion, especially given where QQQ is. The next item I would like to look at is Apple. Apple is again positive, very, very marginally 0.05 in this morning. And I think Apple has left a lot of gaps here, just like Amazon. It needs to come back and fill up. And the movement has been very sharp, so that expect some moderation. And also, this bull channel is still very steep. It has to be somewhere in around 45 degrees for my liking. So I'm going to leave this here at this point of time. And I'm thinking that because RSI is in the overbought situation, there is going to be a bit of moderating in Apple. It can even give up some price action. And therefore, when you look at it in conjunction with where QQQ is, there is a lot of case to be made that there's a good chance that we are going to either bounce down from the line of resistance on QQQ today, or from the 200-day exponential moving average on QQQ. These are all adding evidence to that possibility. Microsoft is down marginally, minus 0.06%, and it's been finding some kind of a resistance out here, and it's got all the MACD as well as momentum seems to show plenty of room for Microsoft, but maybe it's mirroring what's happening with the QQQ. And having said that, let's look at Google. Google is up marginally 0.52, and it has got some kind of a resistance in this pocket. And this is a spot where we have a bit of resistance between these two green lines. So we are likely to bounce back down from 120.54. That's a good possibility out there. We are right now at 119.40. So Google may open positive, but there's a good chance that it may come down again today. That's what I would say for these index moving stocks. And let's go on and have a look at our genomic stocks next. If I was to look at the first stock out here, it's Editas. It did very well, 13.41% up. And we had some good news with their earnings. And you can see here that we had a surprise on both the earnings as well as the revenue. So overall, the expectations were more than exceeded as far as Editas is concerned. We are in a strong position. So we have this gain. And our next resistance is going to be the 200-day exponential moving average. And today the MACD is bullish and also momentum is up. So there can be some more room for Editas to gain before it starts moderating when it becomes overbought. That's my prediction for Editas today. Verb is also looking good. Pre-market, there are no trades. Editas pre-market, no trades. Intelia pre-market, it's down minus 1.98%. Allogene pre-market, no trades. PSCB pre-market, negative 4.22%. Caribou Biosciences, no trades pre-market. Beam, no trades pre-market. Regeneron, no trades pre-market. ArcGym, no trades pre-market. IDNA, no trades pre-market. Teladoc pre-market, marginally up 0.05%. Bluebird pre-market up 2.13%. And then we have SQZ, no trades pre-market. CRISPR Therapeutics up 1.26%. DNA up 0.65%. Illumina, no trades pre-market. IMTX up, no trades pre-market. Then I would like to go and have a look at Invitae. It's up 1.51% pre-market. So that's the overall action. So it seems that slightly bullish to neutral stance as far as genomics concerned for today. And with that, I'd like to bring this video to an end. I hope you like this. If you liked it, please press a like out there. And if you're not yet subscribed, please subscribe and help us grow this channel. And also, please try to join me at 3:30 if possible. We have our live stream at 3:30 where we watch the market close and also have discussions within the community. And I also do a technical analysis on all the Nasdaq, all our watch list stocks on the genomics sector after the market close with an idea to look at how they perform during the day and what's likely to happen the next day. I'd look forward to see you there. Thanks and have a great day. Bye for now.